What do you make of these moves, and do you think we're overdoing it at the front end of the US curve?
So I think that the U.S. is in a specific situation since the Fed has a dual mandate, and we were already uncertain about the labor market going into this series of events. Europe, the UK, that makes more sense given how we would expect monetary policymakers to react there. I do think that it is not the type of move to jump in front of, because there's so much uncertainty associated with what's going on in the Middle East and how that's going to continue to play through to the energy sector. We could get $125, $130 a barrel oil very easily if this continues to unfold in a scale that is measured in months, not weeks, as it was originally intended.
I'm struck by the yield curve, which is rapidly compressing, rapidly narrowing. People are expecting that higher front-end yields are going to send growth substantially lower, and perhaps even more so in the Euro region. How much confidence do you have that that is the correct move, that there is going to be a move much lower, say in 2027, in response to holding rates higher, whether it's hiking or whether it's just a hold?
I think that a flatter curve in this environment makes sense. I think 10 and 30 years should outperform, because if the Fed does fight inflation, delays rate cuts, then we should see break-evens compress over time and nominal rates slip lower. What I'm worried about is I'm worried about the fact that we haven't fully integrated what happens to demand in this situation. What happens to the fact that we have higher prices at the pump that leads to consumers needing to make some hard choices, and we could see consumers under a lot of stress over the next several quarters, which undermines the strong growth argument in the U.S., which has kind of defined us for the last couple of years.
So, Ian, when you put this shock together, is it bullish or bearish for fixed income, for bonds, for treasuries?
I think it's long-term bullish for treasuries. Lower rates remains my base case. I think 10-year yields are below 4% by the end of the year, and I think that the 2-year sector is going to continue to struggle.